Hey, how's it going? So, can you protect yourself? So currently there is like a massive, sell-off on the stock market. It doesn't look good. Blah blah blah. Right? S&P is down like 12%. So, can you protect yourself against this type of market drops if you copy what super investors do? So one of the most popular super investors is Warren Buffett. So some people think that, hey, he is a super smart guy. He does his research. What if I just go to here, which is Dataroma, right? And just copy his entire portfolio. Okay. So will that protect me against the dips that are happening right now? Let me just pause real quick once. Yeah, so here is like Nasdaq QQQ, right? See, it's one of the pension funds, one of the most popular, probably index fund, right? So look what's happening to it right now. It's like it went from here to here. Okay, so this is not a pretty sight. If we look at historic data, it's very bad. Very bad. Minus 14% in 30 days and minus 15% in January. Just this year alone, minus 15%. Okay, so naturally, the first step is to say, okay, am I gonna buy property? Am I gonna go into savings accounts? Right? All of that is BS because it doesn't work. Right? Property after taxes, after expenses, after you pay your management fees, pretty much a savings account. Unless you have like 20 million, the returns you're getting from it is so small, they don't make any impact on your life at all. All right, so naturally, and by the time you do earn substantial return, I'm talking like, maybe 10,000 per month of income disposable, you'll be about 95 years old in property. All right, so your odds of success in that space are very, very slim, unless you were born like what's his name, Trump. Unless you were born like Trump, who has daddy, who has financial companies who will give him good loans at good interest rates. He already has friends who do due diligence. He's stacked, like he's all the ducks in a row. You there, trying to do your research, trying to buy a house, right? Especially in here, I'm in Europe. Like it's not gonna work for you. I already tried that, right? All right. So the natural inclination will be, can I copy super investor portfolio? Will that protect me? And the answer is no. It's not going to do anything for you because here is Warren Buffett, top companies that have 1% or more of his portfolio. And if you look at his performance, that's daily, that's weekly, that's 1 month, and that's year to date. So Moody's -4, like Apple -12. Apple is 40, I think it's 43% of his portfolio. So this is the majority of his holding already lost 12%. Bank of America dropped, right? Moody's like -15, Charter -13, VeriSign. VeriSign is a very small. I think it's like, where is it, like almost 1%. Yeah. So I added these two as well. So I did like up to here because these are kind of the companies that have the most weight in his portfolio, right? So unfortunately, even if you were to copy his portfolio, you would be in exactly the same situation as this in here, as Invesco, as a Nasdaq fund, or let's look at Let's look at S&P. I think S&P is exactly the same. It's like minus whatever 12% or something like that. So whether you buy a pension fund, whether you copy investors' portfolio, super investors' portfolio, it's the same shit. You cannot avoid this fate. So this it's almost the same. It's like minus 11%, right? So do you see like there's no way around it, right? You're gonna have to take those hits. Now, naturally, your next move is going to be, hey, you know what I'm gonna do? I am going to sell everything and I'm going to buy only what super investors buy. Okay? So naturally, you think that, okay, the super investors, they have armies and armies of analysts who analyze fundamentals, technical analysis, quantitative analysis, right? They do quantitative easing, all that shite. And they say this is a good buy, this company is undervalued, blah, blah, blah. So we can see a list of purchases in here that are publicly stated. Now, to see all the list, you have to wait until the end of quarter, 1 month after the end of quarter. All of this data gets released into the public, so then you can see exactly what their portfolio looks like, right? But occasionally, you can see publicly what they are buying. So you can say, okay, so a lot of people bought Vox, Oracle, Asana. What else is? Okay, let's just stick to these companies, right? So let's take Asana. Let's take the ones that are sticking out, right? Vox, Asana, I don't know, Duolingo, Varby, and Kirklands. Let's just analyze those, right? Have they increased in value since the purchase, right? So let's just real quick add them in here. So I'm gonna move this to the side and let's have a look. So this is Vox. We do US ones, right? US, okay. Well, Oracle. Let's just add Oracle real quick. Whoops. Oracle Corporation, Asana. What else is sticking out in here? Stitch Fix, I don't know. It's not very Vox already added. No. Varby Parker. That's a lot of Varby Parker. There you go. Man, I need to look at the total value as well. Is there a way to filter? No, there isn't. Yeah, so Oracle is not a lot. Stitch Fix is actually a lot. Let's add Stitch. How do you spell it? Stitch Fix. That this one has a lot of volume. That's okay. I'll add this one as well. Okay. This is very small. Day one biopharmaceutical is pretty big. Duolingo Inc. is quite. Oh, Duolingo is so many purchases. And then Kirklands. Yeah, we'll just stick to this basically. Yeah, so let's just stick to this. So this is kind of, I looked at these volumes in here and I just added kind of the big ones, you know, like Asana, and I already talked about it, right? Bed and Beyond. Honestly, let's just stick to what we have right now. It doesn't matter because I already know what I'm gonna see, right? Because I don't think you can dodge this. Like, look, Duolingo was purchased by super investors, right? 14th of January. Okay. And it lost 22%. So when did they buy it? Duolingo, 14th of January. So let's see how much money did they lose after the purchase, okay? Because we can look at the data. So they bought on, when was it again? 14th, okay? They bought on 14th. So let's look at data. They bought on 14th to date, right? 14th to today. Come on. Work, work, work. Yeah, so they lost already 10%. On the date of purchase, because they probably bought a lot, it spiked naturally, right? And they already lost 10%. Now, when did they buy? What else did they buy? Asana, look at Asana, right? 33% loss. Okay. And they bought, when did they buy? When was the first purchase of Asana? 11th of January, right? No, 6th of January, okay? So 6th of January was the first purchase of Asana, right? So let's have a look. Minus 17% already. Again, you see on the day of purchase it spikes because a lot of money being injected, but 17% loss. So if you were to follow this, this is actually even, you would have been even worse off. Yeah, you can just look at 1 week. I think 1 week is a good indicator. It'll look like, you see, because by the time you get this information, by the time you transfer the funds, by the time you make the purchases, it's probably you're going to be a little bit late, right? So they bought somewhere in the middle of January, so this is almost end of January, so probably you would be, that's going to be your return, probably 1 week within, like, that's going to be your realistic return. So you're going to lose 17 on Asana, 10 on GeoKing, make like 1%. You see, there is no way to dodge this. There's just no way to dodge this. And you have to understand, like, why am I showing you this? That's because these guys do an obscene number of, like, obscene research, fundamental research. They have a swarm. They have investment companies with, like, very smart people working for them who do fundamental analysis, and this is the result that they are producing, because market is irrational in the short term. In the long term, I'm pretty sure 5 years from now, this is gonna be, you're gonna be like, oh my god, I wish I bought Asana, or I wish I bought Oracle, or I wish I bought Nasdaq, right? Because in the long term, market is rational. In the long term, it behaves with the brain. In short term, it behaves on emotions, and this is why you get this. This is why you get this stuff happening, right? So unfortunately, if you want to play this game, if you want to play this game, um, you're gonna have to learn to live through this. Okay, you're gonna have to learn to live through this. Look, Stitch Fix lost 84% of its value. Vox 53% of its value in 1 year already. But if you look at S&P over 1 year, it's actually pretty good. to be honest with you. I don't think S&P lost any money in 1 year. Let's look at yeah, let's just do this. Click, click, click. Let's just do monthly so we don't have to scroll. Yeah, so you would have been up 14% if you were to buy last year, and just even today, you still would have been up 14%, right? And this is brain dead investment. Like you just put in the money and forget about it, right? The bad news is you're not gonna get rich on 14%. I will tell you that because I already tried that, right? With 14% for you to double your money, and S&P on average does not deliver. Like last year was second best year for the market, and you only got 14%, right? On average, it does like 9 to 10. For you to double your money at 10%, right, it's extremely slow. Like we're talking snail speed, right? So let's say we have 100, or whatever, let's say this. We want to take principal multiplied by 1 plus 10%, and let's say we do 5 years, right? I don't think it's gonna double in 5 years. I highly doubt it. Yeah, so you got 60% return in 5 years. So let's do 8 years. Yeah, so you double your money every 8 years. Yeah, approximately 7.5, right? 7.5, I think. Now you have to understand that this number is a decade. Okay, so how many times can you realistically double your money in your lifespan? You're probably going to start when you're 30 or 40, right? By the time you retire, you're going to be like 70. Okay, so you can do it 4 times. All right, and you have to factor in things like inflation, changes in prices, and all that shit. So like S&P is a great way if you want to stay in the upper middle class, right? So you're gonna be still middle class, but you're gonna be well off, right? You're gonna be driving a Mercedes, right? You're gonna be going to 4-star hotels, right? But you will never taste the thrill of having large amounts of money. Now, by the time you do, now I'm saying this, but I mean, realistically, if you stick until you're 80, you will see substantial gains. But I mean, you're 80. Do you know what I mean? You're 80. And like at 80, being a billionaire is kind of, it's kind of like, it's like, I don't know. Well, you're not even going to be a billionaire. Like, realistically, what are you going to be like? Like 3 million or something like that net worth. And this is, you have to understand that this is you've been saving for your entire life. Entire life. And God forbid you sell, you have to, half of it will go into taxes anyway, right? So unless you're selling like 100 million, dude, you're gonna, if you have 4 million, you sell it like, you're gonna end up with like 1.5 million, dude, right? I mean, eh, that's not even gonna be a value of a house in like 40 years from now, right? Like right now, €1 million is not even worth talking about. It's such a small amount because if you go into Europe, like good locations like Zurich, Germany, like Berlin, an average like, let's just Google it, right? 2-bedroom apartment, Zurich price. Okay. 2.5 million, right? 5.5 million. Oh, no, 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 no. There's the price. There's the price. Oh, phew. I thought it's like 5.5. It's 5.5 rooms or something like that. Okay, so that's good. So now we have, okay, so this is 134 and this is 2.5 million Swedish francs or whatever it's called, right? Now this is like a standard 2-bedroom. Well, this is a bit, but you see, like, this is an apartment I'd like to live in, right? This is the apartment I would wake up and I would be proud of myself, right? CHF to euro, I think, like this, right? Yeah, so you see, it's like it's almost 1 to 1 Swedish francs, so it's like 2.5 million, right? So if you save for your entire life investing into S&P, you withdraw the money after you pay the taxes, you won't be able to afford this. And you are 80 years old. 80 years old. Okay? Now, how useful is all of this when you're 80 years old and you can't even afford it? So if you want to afford it, you got to be 90 with this 14 whatever 14% what is like 10% return. Like, dude, like, do you know what I mean? And this is today price. I'm not, because this is probably gonna be 3.64 by the time you'll be 90. Of course, it's gonna be slightly bigger, maybe like 160 square meters, right? Maybe 6 rooms or whatever, right? I don't know, what is 2.5 room? 2.5, I don't know. Is it rooms or whatever? Yeah, look, you see 1.72 square meters, 3.3 millions, right? Well, this one is, well, how many bedrooms, right? So that's 1 bedroom, 2. And I mean, do you see, this is nothing special. This is, you're not living next to Biden or next to, I don't know, who is like the latest celebrity, like, like, you're probably going to be living next to like dentists, engineers, like software engineers. Do you know what I mean? I mean, it's nice, but it's not like, it's not a villa. It's not, I mean, like, so that's okay. How many bedrooms? I think it's just 2 bedrooms, right? Yeah, so this number here, rooms, 4.5 rooms. Why are they saying 4.5 rooms? I think one half a room is the guest room or whatever. So there you have it, right? Basically, what I'm trying to tell you is like, there's no way out of this, right? You're just gonna have to. You're gonna have to live through them, right? Because copying super investors doesn't work. you're still gonna get hit, right? You're still gonna get hit, right? If you do analysis yourself, I mean, realistically, let's be honest. How many analysts with how many years of experience are doing this research and saying these are the purchases, right? And in the short term, they still manufacture this. And let's get really real here, right? What are the odds that you are smarter than a battalion of those analysts, right? Highly unlikely, highly unlikely, right? So if they're producing this, if you try it yourself, you probably end up with a Bitcoin, and then you'll be like, ah, I wonder what's happened to Bitcoin. Hold on a sec. Yeah, because most people are like, yeah, cryptocurrency, my man, it's the future. Let's see. I'm pretty sure as I saw it at 190 at some point. Yeah, so it lost 30%. And let's see this month. Yeah, it lost 28% it lost. And if you were to buy it for 1 year, I'm pretty sure you're gonna be in deep shit. And you have to fundamentally understand what are you actually holding, right, with the Bitcoin. Oh, we can go by month again, then we can see. Oh, you'll be up 32%. But I mean, fundamentally speaking, what are you actually holding with the Bitcoin? I mean, I'd rather be down 20% with Nasdaq than be plus 10% with a Bitcoin, right? Why? Because Bitcoin is a worthless. What does it do? It doesn't do anything. All right. With S&P, I can think to myself and I can sleep well and with Nasdaq, because I can say, okay, my money is with Apple, my money is with Microsoft, my money is with Amazon. And if you look at fundamentals of these companies, record breaking revenue numbers, record breaking sales, record breaking profits, all right? This is something that makes sense, right? If you look at research of those companies, everything is peachy, right? But I mean, with Bitcoin, what is it like? What does it do? It doesn't do anything. All right. So the title of this video is gonna be "You cannot copycat Super Investor's portfolio and escape the market dips," because that's what I just proved to you. Okay, take care.